Hello, I am Lori Lane Zucker, founder and CEO of Impact Entrepreneur, and welcome to our webinar, How Financial Advisors Advance an Impact Economy. And a special welcome to all the members of the Impact Entrepreneur Network attending the webinar. Impact Entrepreneur is a large global network of systems-minded change makers, entrepreneurs, investors, scholars, and students of social and environmental innovation who believe that this work needs to be done within a transformational framework. We build companies, we invest in them, we study and teach about them, but we also understand that we have to collaborate to build a new business paradigm and ecosystem that functions with a very different brain chemistry around those businesses, what we might call an impact economy, in order to find an authentically sustainable way forward. So if you agree with this perspective and are not yet a member, join the network. It is free. The only entry fee is your commitment to the business of change. This webinar is part of two series that we offer to network members and others. The first series, of which this is a part, is called Building an Impact Economy, and it is composed of topical panel discussions. And the second series is called Luminarias, and that's theme is Fireside Chats. Selections from past programs can be found on our website, as well as our YouTube channel, Impact Entrepreneur TV. And be aware that you can become a premium member of Impact Entrepreneur and get admission to all live webinars, as well as access to the entire archive of over 120 past programs, as well as unlimited access to the magazine's content and other ways to engage with our global community. And you can find information on everything I've just mentioned, and you can read all our magazine articles, subscribe to our newsletter through our website, which is www.impactentrepreneur.com. Okay, I'm now pleased to introduce our program and our distinguished guests. We find ourselves at a critical juncture in our global economic system, one where a shift is not only feasible, but increasingly essential. Just look at what's been happening in the world in the last week or two. It's very palpable. As I noted earlier, the pursuit of a sustainable, impact-driven economy requires the alignment and collaboration of diverse stakeholders, each bringing unique perspectives and tools to the table. One key player in this transformative journey is the financial advisor, guiding investment capital, informing decision-making, and promoting transparency. Their role is fundamental in steering capital towards sustainable and equitable practices. So in today's discussion, we aim to uncover the vital aspects of this role and explore the multifaceted spectrum of impact investing from the perspective of financial advisors. From understanding the distinctiveness of a values-based advisor to exploring strategies for avoiding green and impact washing, from navigating financial fiduciary duties in the context of systems change to considering the implications of team diversity, our conversation promises to be enlightening and engaging. Our distinguished panel, including the co-founders of ValuesAdvisor, who I work closely with to develop this program, and two seasoned financial advisors, we look forward to a robust and meaningful dialogue. Together, we're going to delve into the complexities and opportunities of building an impact economy through informed and proactive financial advisory. So let me briefly introduce to you now our guests. Nicole Middleton Holloway is a San Francisco-based advisor with Natural Investments. Her personal mission is to support conscious investors in making a positive impact with their wealth. As a certified financial planner and financial activist, Nicole enjoys designing portfolios for clients that incorporate racial, gender, and economic justice. And she uses her expertise and position as a business owner to open the door for more women and people of color to work in the financial services industry. She holds a master's from Golden Gate University and a bachelor's from the University of Southern California. Nicole, can you come off mute and just say a quick hi?
Thank you. Hi, everyone. It's great to be here.
Great. Our second guest is Lisa Renstrom. She is the co-founder and CEO of ValuesAdvisor, a nonprofit dedicated to making it easy for individuals to find values-aligned financial advisors. ValuesAdvisor is her answer and offering to the impact investing field and most recent contribution to climate solutions. She is the former president of the National Sierra Club, Rachel's Network, and the Threshold Foundation, and the co-creator of Divest Invest Individual. She currently serves on the board of Bondwood Social Investments, Eco America, and Fresh Farm Markets DC. Lisa, can you say a quick hi?
Great to be here, Lori. Thank you.
Thank you. Our third guest is Kate Simpson. As an impact investing professional, trained life coach, and teacher, Kate has spent her career helping investors on their impact journey. She is a co-founder of ValuesAdvisor, in the nonprofit platform to connect investors with value-aligned financial advisors, and the creator of Take Two Invest Your Values course. Kate, can you say a quick hi?
Yes. Hi. So great to be here.
Thank you. Our fourth guest is Stuart Valentine. Stuart is the co-founder of Centered Wealth and has been a financial advisor for the last 19 years. Prior to that, he was active in the global futures market for 13 years. In parallel with his investment management and advisory work, Stuart has actively been exploring the boundaries of philanthropy and entrepreneurship in his role as co-director of the Sustainable Living Coalition and Sustainable Iowa Land Trust. The Centered Wealth mission includes, quote, manifesting the experience of centered wealth for clients by supporting the integration of their deep life purpose with their investment portfolio. Stuart is the co-author of Imagining Philanthropy for Life, a whole system strategy to transform finance and grow true wealth. Additionally, Stuart also plays a faculty role at Maharishi University of Management in the areas of socially responsible investing, sustainable community design, and transformational entrepreneurship. Stuart, it's great to have you here. Can you say a quick hi?
Yeah, thank you, Lori.
Thanks. All right, so we're going to begin. I've asked Lisa and Kate from ValuesAdvisor to kind of give us an overview of the space that we're talking about today. So Lisa and Kate, I'm going to hand it over to you.
Thank you, Lori. It's really a delight to be speaking to an impact entrepreneur audience, to be with others who seek to move us away from an extractive economy towards an impact one. As Lori said, my effort focus has been to make it easier for investors to find a values-aligned financial advisor. Why? Because where money goes, growth flows, markets work, and the third tenet of my philosophy is that people are at their core have solid good values. So therefore, capital holders have to have a value-aligned financial advisor in order to create an impact economy. Advisors suggest and recommend our investments. They help build and balance portfolios. They guide, limit, encourage us. So they have the wherewithal to influence, to build or not to build an impact economy. If we stick with our traditional advisors who don't have experience in sustainable impact, SRI, value-aligned, then we're going to build more of what we have now, which is not working. If an advisor is value-aligned, then they will build the world that we can and want to live in. And the industry is in the middle of this shift, and it's being led by millennials and Gen X. A recent Fidelity piece called The Rise of Impact Investing, How Financial Advisors Are Adapting, I'll put this in the chat, reports that 58% of financial advisors say they are personally interested in impact investing. And this is led by the millennial and Gen X advisors. 75% of millennials said that they have made at least one impact investment, compared to only 30% of baby boomers. And in a survey commissioned by Morgan Stanley of 800 US individual investors with an oversampling of millennials, they found that 99% of millennials were interested in sustainable investing. So as demand for financial returns coupled with impact increases, more investors are, and it will accelerate, are seeking advisors with these skills. So Kate is going to show you the platform that we created, designed specifically to meet this demand and this need. because who you choose to manage your money matters. So Kate, take it away.
Great. Thanks, Lisa. As Lisa mentioned, we created ValuesAdvisor as a way to help people find advisors who have expertise in values-aligned investing. We set criteria for advisors, structured questions on the platform to ensure that they have the impact expertise that they claim to. You'll see when we look at it that there are a variety of ways that advisors can help you align your investments with your values and move us all towards an impact economy. Some of these ways include advising you to invest in companies that are working to develop products and solutions to meet the Sustainable Development Goals, such as climate action or clean water, or invest in companies that have made a commitment to diversity on their boards. But they also might engage in shareholder advocacy, which can include encouraging company management to adopt more sustainable business efforts or disclose additional information about their hiring practices, for example. They may also offer guidance on how you can vote your proxy statements on social and environmental issues that are important to you. The ValuesAdvisor platform shows you many of these ways that advisors can help with your values. So I'm going to do a screen share and we're going to take a look at some of them. So this is the first page that you come to when you come to the platform, and you'll see that it's constructed differently than many other advisor matching platforms. Not only are we a nonprofit, not only do we only include advisors with impact expertise, but we also keep investors in the driver's seat the entire time. So you come and you see the entire universe of advisors, and then you can filter based on your own specific needs. We talked about impact themes a little bit. And so these, you can filter the universe based on specific impact themes. And these categories are based on the UN SDGs. So you can filter them based on specific issues that you're interested in. You can also filter them based on shareholder advocacy services, which I also mentioned. And you can also filter based on asset class. And so some advisors invest in certain asset classes and some don't. All of these are through an impact lens. So you can filter based if you do know what asset class you may be seeking to invest in. And then I also mentioned how we have qualitative questions. We have detailed questions that really give the opportunity for advisors to share their expertise and allow investors to determine whether they're really offering the services that they say they are, and also give a lot more answers than you would get from a website or certainly from other advisor matching platforms. So you see when you come to an advisor's full profile, we ask them to answer very specific questions that we really took a couple years to develop, working with some of the leading impact advisors and investors. And you can see some of these questions are impact genesis story, case study of a meaningful investment, your team's leadership in an impact field, how you integrate the UN SDGs into your investment process, and also importantly, how you measure and report on impact. So you may be wondering how you get access to this. I just want to finish my comments, my opening with, as a impact entrepreneur member, you have access to this platform, and then I'll also obviously be here for any other questions that you have as we move through the webinar. Thank you.
Thank you, Lisa. Thank you, Kate. Now we're going to quickly move over to Nicole and then Stuart and just ask them to speak for a few minutes about the work that they do. Nicole, you want to go first?
Sure. So I'm also going to bring up some slides here and give you a little bit more background on myself and my team, the rest of my team at Natural Investments. So just a little bit about Natural Investments, and I'm proud to be able to represent a team of about 20 advisors across 10 states in the United States. We as a firm, our roots go back about 30 years. And throughout this whole 30 years, the firm has focused really exclusively on socially responsible investing. You can see a picture, it's just a portion of our team we took this year at our annual advisor and staff retreat. So you can see we're a pretty diverse crew. Other things to say about Natural Investments, we're a B Corp, proud to be a B Corp. We engage in a lot of shareholder advocacy work. We are members of US CIF. And how we work, each of the 20 advisors and various teams are independent with the firm. So I myself and the rest of the advisor teams, we're all kind of independent contractors with the firm who own our own small businesses. So we are essentially impact entrepreneurs ourselves. Let's see. I'm just trying to figure out how to go. Okay, so just so I would say it's really great to be working with such an incredible team. I feel like I can show up as my authentic self and practice and work with clients and engage in this kind of financial activist work in a very authentic way. And it's very different from how I entered the finance industry. About 10 years ago, I entered in a very traditional financial services role. And I knew that if I was going to stay in this work, I had to be intentional about trying to find a different way, because I knew the power of a financial advisor in the ways that we are able to direct the flow of capital in the world. And today, I would really through the power of my tribe of kind of values-aligned advisors, I was able to find Natural Investments, become an advisor on the team, and grow my practice over the years. And today I get to do this work with two other colleagues on my team. My team here in the Bay Area is called Strategy Squad. You can see Diana Yanez, who's another advisor on my team, another CFP as well. And Gwen Fuquay, who's also on the client services side on our team as well. So as an advisor, we practice pretty comprehensive financial planning, but the most exciting part of my work is to be able to help clients invest in things like social justice, invest in very real, tangible ways that is seeking to benefit the world and make changes in the world and support kind of a more sustainable economy. So our clients tend to be newer generation folks, next generation folks, tend to be female, but we really do work with quite a wide range of age and gender and sexual orientation. Our clients are pretty diverse.
Thank you.
The last thing I'll say really quickly is the exciting thing, and that might be exciting to a lot of folks on this webinar, is Natural Investments is moving to a different type of ownership this year. We're completing a transition to a perpetual purpose trust. This means that the firm is converting its ownership from 6 owners to a trust that is going to really help democratize the way that, democratize decision-making at the firm. It's going to help provide, kind of more equity within the firm. And the firm had grown to a point where it was going to be too expensive for newer advisors like myself on the team to be able to kind of buy into the firm. So our team really, over the last 18 months, tried to work with a consultant, figure out different ways of business transition. And so for many of you who are on this webinar, who may be thinking of your own business succession, to be learning about the different ways of, cooperative ownership or trust ownership. I'm not going to take too much other time because I don't have a lot of time to talk about it, but it's something that we're very excited about, and excited that we're going to be the first financial services firm in the country to do this type of ownership transition. And we hope that we will be able to influence others in our field as well. So I'll stop there.
Thank you, Nicole. Stuart, can you introduce your work to us?
Yeah, sure. Before I do, though, I really want to just acknowledge you, Lori, for creating the forum for this kind of dialogue. I cannot think of a better use of technology, bringing people together to share ideas. So I really appreciate, and I've watched you from day one grow this thing. So I thank you for making this possible. So I came into this business. I grew up in the eco-radical culture of Portland, Oregon in the 60s and 70s in a very progressive context. And it was all about that Margaret Mead statement that said, never doubt that a small group of committed citizens can change the world. Indeed, it's the only thing that ever has. I swear that little, compass needle has driven my activities throughout my life. I got captivated with the renewable energy idea in high school in the late 70s. My undergraduate degree is in renewable energy systems. I went into an MBA, fascinated about markets, and during that period in the early 80s, the deregulation of the pipeline industry. So I got sort of aware of the utility industry and the way regulations shape markets. I jumped into the world of futures and options trading because I had moved to Fairfield, Iowa, home of Maharishi International University, which, as many of you or some of you may know, is the home of the transcendental meditation scene. It's really a hub for the globe, very unique experiment in community living, surrounded by group meditation. Well, here I am, absolutely in the belly of the beast, profit first all the way, trading, buying, selling, while bracketed on each day, I'm in deep group meditation morning and evening, trying to reconcile what feels like the impulse of life trying to push through while I'm participating in what is a very constricted environment of trading futures and options. Fortunately, I stumbled into the SRI and the Rockies conferences back in 1998 and met Eric Leanson and Peter Camejo, who were the founders of Progressive Asset Management in 1987. We connected very closely, and they were able to mentor me into the Progressive Asset Management Network, where I started full spectrum fee-based and brokerage work in early 2000. 10 years later, I met my partner, Gina Pentracy, and we, over time, merged our two business. Gina's based in Minneapolis with her daughter, Anya. I'm in Fairfield, Iowa with Annalisa as my support. And we basically midwifed out Centered Wealth in 2017 together. So here we are. Now, out of this process, we all, in our own way, whether it's articulated or not, we have a worldview, a model, if you will. And I'll just share with you the model that drives the work at Centered Wealth. I'll go ahead and share this screen, which I call, which is the Centered Wealth tree. Now, you see at the base consciousness. I've spent 40 years sort of playing around in the world of transcendence through regular meditation, and I find it to be a gift that just keeps on giving and giving through creative impulse all down the road. This model emerged out of my own experience and the vision of what that, as Charles Eisenstein would say, that more beautiful world in our hearts we know is possible. And frankly, I've had really good fortune with mentors, Peter Camejo, Eric Leanson, and Hazel Henderson. We're all really part of my team, if you will, helping me grow into this. So you can imagine, the philosophy here is about what I call the cosmology of connection, that integral to this impact economy work that we do is a deep yearning for all of us to have a connection with all of life. And that idea sources out of the field of consciousness. We each come into the world with our own unique DNA and the culture we grow up in, which I call the gift of life. And it's born out of experience, emotions, gives rise to beliefs. Your beliefs color your thoughts. You really can't have a thought independent of your belief system. Gives rise to your ethics and values in the trunk of the tree, and then we enter into the financial planning process. The canopy of this centered wealth tree is the market domain of what Hazel termed the growing green economy in her 2006 book called Ethical Markets. And it highlights the areas we traverse in, which are full spectrum, from publicly traded markets using ESG screening and shareholder activism in the public domain, private impact investments. Of course, we have many activities going on in the renewable energy sector, organic agriculture, and the somewhat underdeveloped marketplace with respect to financial advisors like myself is what I think is the all-important puzzle piece, which is working to enhance community investment options for our clients. And if you look on the left sidebar there, the model or progression of this is simply that the primary investment, in my opinion, that each one of us as a human being can make is the investment in attention. Closing your eyes, having a chance at actually settling into yourself, because the benefit of that is that out of it emerges more clear communication connected to that gift of life. And through communication, we gather other shared values, individuals. I call it the bird call. The bird call brings people into our lives, and we create communities like Impact Entrepreneur through the process of shared visions, shared values. And in fact, that is our community. Nicole, you used the word tribe. Being connected both cosmologically to life and our tribe here on Earth is the seat of what we call centered wealth. And the purpose of money is simply to be in service of growing an experience of centered wealth into each of us as individuals, which spills out into our economy, such that we can transform what is dominantly a money-first, hungry caterpillar style of economic being into a more settled state of centered wealth. So that's kind of the vision of purpose for all of us at Centered Wealth, working with our client base to help them define and clarify what it is they really care about deeply, and to support them in going from the anxiousness that comes with being in the market when you're driven by a profit first ethic to an experience of centered wealth that comes through understanding the value of a blended return approach with impact purpose behind it. So that's the quick thumbnail sketch.
Thank you. Thank you, Stuart. Okay, let's dive right into some questions that I have for the panel. Right at the top of the hour, as I mentioned earlier, we'll get to your questions. We already have one question in the Q&A, another question that Rosalind put in the chat that we'll get to. Please feel free to add your own questions to the Q&A, and do upvoting too. That's giving the thumbs up sign next to the questions that you most want to hear our guests answer. As we delve into the concept of an impact economy, our first focus is on this critical figure of the financial advisor. And Nicole, can you elucidate on why you think the role of a financial advisor is integral to individuals and organizations looking to contribute towards building an impact economy?
Yes, so thank you. So financial advisors are key. We are usually the ones who are engaging with our clients around selecting, recommending, and selecting specific places to allocate capital to investments, whether it's in a publicly traded portfolio, whether there's some allocation into alternatives, private investments, real estate, et cetera. So most individuals, most clients, they're not really aware, and they really lean on the advisor to be that expert to really help recommend. And there's so many beautiful, there's more of a movement towards sustainable investments, towards community investments, impact-driven, whatever you want to call it. And clients may have heard, there's many of you, they may have heard of all these structures, but how they actually fit into a portfolio is the hard part. Trying to select which ones. There's a lot of nuances when it comes to more impact-driven investments, and the kind of more pure impact you're going with, the less kind of publicly traded investments tend to have lots of different pieces that a person needs help deciphering which one is going to be a good fit for them from a time horizon perspective, from a risk perspective. Can they qualify for it depending upon their assets and accredited investor status? So an advisor who is knowledgeable about impact-driven, values-based investing can really help narrow down those opportunities and help a client really practically implement them.
Thank you. Stuart, do you have anything you'd like to add to that?
Yeah, I think I can. That was a very good description of the pieces and parts and planning that goes into crafting a portfolio. But I'd say also one of the really integral roles that we financial advisors take is that by virtue of just being in the front row seats for a period of time, we're able to offer a vision of possibilities. I use the word visioneering, where we both deliver vision of the big why. Why are we leaning hard into this growing green economy? What are the benefits of doing so? And then also offering the engineering skills through portfolio planning and financial planning and selection to help that client align kind of like a laser beam onto their path of investment for investment success. Additionally, I think one of the really big values is just what we're doing right here. Advisors like ourselves, through professional associations, client networking, et cetera, we become embedded in a network. And I believe the network is the organizational design of the 21st century. So we're able to offer clients access into various networks that we overlap with. And harnessing the power of networks is the way that we leverage our impact. Because at the base of all of this is really a conceptual idea and a heartfelt purpose. And, we have to go from the head to the heart to make this impact economy realize the benefits that I think, are all in it for.
Thank you. Thank you both. Lisa, you spoke about what one could say is a noteworthy transition between unfolding in the world of finance from traditional advising toward value-based advising. I wonder if you could elaborate further on the key differences between a traditional financial advisor and a financial advisor. And this might have been, this might be quite obvious given what's been said already, but I just wonder what further differentiates traditional from values.
Sure. I'll just, the 5 things that I chose to, and I won't go into the details of them, but the first is like approach. A traditional financial advisor focuses on risk and return, mostly, period. A values-aligned advisor takes a more holistic approach, and they're looking for both financial and social return, which, as we all know, is done without any concession to the financial unless desired. Second is measurement and outcomes. So the outcomes from a traditional advisor is you get a financial return, and any ancillary, whether positive or negative, are not a consideration. A values-aligned advisor delivers things like carbon footprint, environmental impacts, labor practices, diversity and inclusion, sustainability standards and frameworks. So how they show up in the world and the risks that they take to reach their financial return are different outcomes. Third is education. A lot of different education happens when you're working with the values-aligned advisor. Fourth is the product. I mean, the products are different. So a big, big long list, but green bonds, CDFIs, the product of shareholder advocacy and proxy voting is so important. And which is my fifth, which is engaging with companies. So, when a financial advisor works with a shareholder advocacy, proxy voting, engagement, dialoguing with management, they improve the corporate practices and they can really move mountains. I mean, As You Sow, who collaborates with shareholders and advisors, filed 211 shareholder actions last year, and 70% of what they were talking about were withdrawn, or 70% of the actions were withdrawn because the company went ahead and took the action because they listened to their shareholders. So, there's just, there's a huge difference. And I'll just take one more minute to share my screen. When you look at our advisors, which range from small boutique firms to very large firms. So, RBC Wealth Management, Brown, 1919, Pathstone, GEM, they work primarily with endowments and foundations. All of these firms, from large to small, share the thing that they can invest with value, whereas a traditional advisor doesn't have. And there are other values-aligned advisors that are not on this platform, but these 43 have been put forward by our network of affinity groups and networks such as Impact Entrepreneur, and they have passed our screens, and they show up here by, with a lot of answers that allow you to see the difference. And I'll stop there.
Thank you, Lisa. I want to now talk about the subject of fiduciary duty. As we strive for economic transformation, we inevitably encounter certain tensions, and one such tension that comes up all the time, just at a conference this last week, and this tension came up quite often. It's between fiduciary duty of financial advisors and other investors, and the push for systems change, for deep transformation. Stuart, how do financial advisors navigate this potential conflict?
Well, I can speak about how I attempt to walk that fine line, but one aspect of fiduciary duty that I think is absolutely right and proper, which is simply that as a financial advisor, I act in the client's best interest. Hence, it is what I would call a client-driven process. And I am there to facilitate clarity of goals, definition of needs, and then to compose the portfolio solution that best meets that client's needs. So I think I would best summarize it, the fiduciary standard, as meeting the needs of the present, and with respect to the very real systems transformation underway, lean hard into that with the client. And that involves a lot of education because, we're all a product of growing up within a cultural context of reductionism, of profit first. And how do you go about thinking about, say, blended return or true impact? That takes an inquiry process. It takes an education of or showing of examples of companies, for example. But it is very, very clear that to the degree that we stay in the status quo, like Lisa, you mentioned earlier, we're going to get more of the same. So we really have an important job as an advisor to point out the deficiencies of the existing, what I call profit first methodologies, and the opportunities and promises and the risks of a more whole systems approach. So in that regard, I have the image of, even though I've never been to a greyhound dog race, I use the image. I think the role of the financial advisor is to be that mechanical rabbit out in front of the proverbial dogs, pulling forward best practices in impact and sustainable investment.
Thank you. Thank you. Let's move on to the next subject. I've got so many topics I want to cover here. Nicole, you've in your introduction, you highlighted the diversity in your firm. And the kind of the assumption that I make is that can bring fresh perspectives and innovative solutions. And I'm wondering if you can kind of talk about how diversity in your advisory team might have transformed the work of your firm and influenced your approach to impact investing.
Yes. So the funny thing about diversity, and when you bring it on, whether it's from a racial perspective or a gender diversity, there's lots of different types of diversity. But when you get these different perspectives, these different life upbringings, experience levels, outlooks at the world, it kind of forced our firm to look ourselves in the mirror and think more critically about diversity, about justice, about equity, inclusion, all those areas, and really like look internally what are our practices around all those items. If we are putting ourselves out in the world advocating for these things, we have to do so internally ourselves. So it involved who we bring on as advisors to the firm, how we support advisors who may be coming in from different class levels or opportunity levels. How do we support them? It changed the way it changed the way that some of our due diligence questions and areas of due diligence when we're evaluating new investments or new to approve alternative or community impact-driven investments, it forced us to kind of rethink some of our criteria around due diligence and what are the questions, or if we're trying to help clients invest in more companies led by people of color, and there's these track records that are the standard of our industry in terms of due diligence. And well, if these funds haven't been around for 10, 20 years, like, is that going to be how do we rethink what are is the criteria that will give us faith, and what other questions or what other background do these leaders of funds or leaders of companies have that can kind of help shed light on how our opinion of how the fund might perform in the future, or the impact that they're going to have in the world. I also have personal experience from being able as an advisor to share my own perspective of growing my own company, and the support that I've received from the impact space on how to do that. I think my clients have really appreciated that. I think that if we are bringing more diversity within our space, within advising teams, like it's just only going to continue to help push our industry to really adopt changes, to really be leaders and in creating policies and moving capital in a way that I think can speed up the change that we're trying to seek and see. So hopefully that answers the question.
Thank you. Yeah. Kate, I want to talk about the spectrum of asset classes, kind of as you reflect on the advisors that are on your platform. Can you elucidate how financial advisors advise on the full spectrum of investing with impact for their clients, from cash to private markets to public equities? I know, Stuart and Nicole have talked about their approaches. What are you seeing?
Yeah, I love this question because we really do see impact investments across all asset classes. And the first one I want to talk about that we see very often highlighted by impact advisors, but not always recognized as much or realized by investors, is with your cash. So it's an asset class that's often overlooked. Cash or a cash equivalent, and it can have really significant impact. For example, Lisa mentioned CDFIs, community development finance institutions. Generally, they work in underserved and low-income communities. In fact, nationally, I think 83% of CDFI money goes into underserved communities. These are communities, that often have a hard time accessing capital. So having the money go directly into these communities of need, they focus sometimes on affordable housing or loans to local businesses. And it's a really great low-risk way of getting your money into your local community. You can also put your cash in a credit union or a responsible bank. So there's a lot of different ways that you can do this. But one thing I do want to say is this is not something that individual investors should have to figure out themselves. If you're working with an impact advisor who really knows what they're talking about and has real expertise, they will know of all of these opportunities, and they will be able to make some really good suggestions on how to activate that cash portion of your portfolio, or really in any asset class that you're interested in, as long as it fits with your financial goals. Another one, just quickly, is public equities. A lot of people have heard, ESG, the term ESG, environmental social governance. This is very often referred to as in the public equity space. A lot of services provide ESG ratings. There's some new SEC regulations around that are proposed around what funds can use ESG or not, but those are not actually, those have not been adopted yet. So you have to, again, be really careful about the advisor you choose, because you're sort of relying on their expertise to really be able to get to wade through the sometimes like greenwashing or impact washing that some of these ESG funds may be using. In bonds, it could be anything from green bonds or social impact bonds. Those are something you'd want to ask your advisor about. And then in the private markets, often there's sort of an assumption that private markets may be higher impact. Of course, it could also have higher risk and higher return. So again, has to be appropriate for your own financial situation. Again, important to talk to an advisor about. But this is where you would directly invest in a company or a fund that's providing a specific solution in an issue that you care about. So, for example, it could be a climate solution, or a company that's engaging in a particularly responsible business practice. Maybe that's addressing a sustainable development goal that you really care about. So I would say, I showed when we looked at the platform, all of the different asset classes, and you can filter based on those asset classes to really find advisors that offer impact investments within each one. And I would just say, it's really important to take the time to find the advisor who is that right fit for you. So, because there really is a whole range of different types of advisors out there. So thanks for the question. It's great.
Thank you. Thank you. We've got a number of questions in the Q&A. Please just keep adding them. We've got another 5 minutes or so before we start taking them. And please do, if you can, spend a little time looking at the questions that are on the queue and doing some upvoting. Audience is very helpful in helping me prioritize which ones we ask first and which ones we get to. Stuart, one major concern in the realm of impact investing is the problem of greenwashing and impact washing. What are strategies financial advisors can employ to ensure the authenticity of impact investments and avoid these pitfalls?
Good. Well, I'd first want to just take one quick step back and just say greenwashing is, at least within my theory of change, greenwashing is part of the change underway. We collectively, this community, are working to rewrite the source code driving investment decision making. There are those who are going to be on the front end of that change dynamic, and those that are followers, and those that are laggards. Okay. So greenwashing in its own way, actually, I think it's healthy because it provides contrast. The individual who's trying to navigate this will, come across a conversation with one of our tribe versus a more traditional, and get a sense of what is actually going on. There was a wonderful book written by Chris Laszlo titled Embedded Sustainability, and in it, he described the process of change within large organizations. And think of it as a healthy virus embedding itself into company culture, and it takes quite a while to unfold. That said, yes, we as the advisor community really need to be alert that we are offering our clients authentic product, because it is quite evident when the distinctions are there. So for me, in terms of the due diligence process, whether it's a private investment or a public domain investment, is first and foremost, get to know the management team, because it is the collective values of that management team that are going to filter into the product itself. So understand where the commitments are within the product team itself. And I don't need to use any names here, but yesterday I was cold called by a renewable energy fund. Well, they are $34 billion, 22 years, I believe, the time period of investing in oil and gas before they finally came to the point where now it's going to be financially profitable to invest in renewable energy. And they have considerable internal skill sets, et cetera. But the values that are driving that move are what I call the profit first motive. And there was a good question from Rosalind Payne in the chat here that, Rosalind, I agree with you that just the impact investment strategies we take, I certainly look for profitable solutions. I also look for what I would call whole system solutions, or the blended return concept, so that we don't become just myopic on the financial returns. But I do believe that we can make this transition while delivering acceptable financial returns to the client.
Just got a couple of minutes before we get to the Q&A. Nicole, I want to follow up on what Stuart just said. As he suggested, one of the intriguing aspects of impact investing is the spectrum of returns. How do financial advisors help their clients understand the spectrum from concessionary to market, and also potentially the use of philanthropy in innovative ways in the impact economy?
Yes, there is a spectrum of returns when we're talking about impact-focused investing. And what Stuart means, I think what Stuart means around the blended return is really, you can build a portfolio where portions of the portfolio, and this is how I help my clients build portfolios, is that we segment the portfolio. We have different asset classes, and portions of the portfolio may have market, not non-concessionary market rates of return, and other portions of the portfolio that may be more allocated to community investments may intentionally be seeking lower rates of return or below market rates of return. And some are maybe in the middle in terms of rates of return, because they're not striving for market rate, but they're still seeking to be competitive. Together, that blended should create a target rate of return that is going to help a person still meet their financial goals as well as their impact goals. So that's together, those I think are important. But I don't necessarily like the term concessionary, because when we're talking about concessionary, we have to be critical about that. I mean, some people, you know, it's not some people, but in general, the desire to like have this profit first mindset that I like how Stuart refers to it. We have to challenge that. I mean, that profit first capitalism mindset, it needs to be challenged because it is extractive, and we're trying to move into a way that investing can be less extractive towards and all stakeholders can benefit. And so some, you know, as investors, if you are being holistic and building a portfolio with different types of rates of return, different asset classes, you can still be successful, and you can in both from a financial perspective and an impact perspective. So I just would want to say that.
Yeah, thanks. We are going to get to the questions in the queue, but I just want, this is a really important to me line of discussion. Lisa, can you shed light on how financial advisors are integrating philanthropic strategies such as donor advised funds into their investment strategies to promote a more blended or integrated finance approach?
Sure. I mean, so when an investor is also a philanthropist, a donor advised fund or DAF helps manage the timing of taxes or unappreciated value. And if they have a clear vision of the change they want to make, then they can support nonprofits and for-profits with various kinds of capital, depending on the need and stage. For instance, you can have philanthropic capital to fund research. You could have early stage financing to scale an operation, to refine product or expand to new markets. You can further enable growth of a social enterprise with debt financing. And of course, you've got equity. So these integrated capital approaches can allow an entrepreneur to grow at a more sustainable rate. Often an integrated approach has sort of a patient capital element to it. And the diverse mix meets the needs of different stakeholders while driving impact. So it's philanthropy combined, and using your DAF to do that is a wonderful place to begin or to expand it.
Mm-hmm. Great. Stuart, I see you're off mute. Did you want to make a point there, or?
No, sorry, I just forgotten to turn it off before.
All right. Carl, let's go with Carl's question in the queue. Where may I best post publicize impact investment opportunities to gain the attention of financial advisors?
I would say I'm not sure exactly where to post it, but what I can say, what I have seen is that if you show up to places like ESG for Impact conferences of where there are lots of financial advisors who are there, the conferences around sustainable investing, that's a really good place to start embedding yourself. Like, it's very relationship driven, I would say, in terms of how our team sources new impact investment opportunities. And so the sooner you can start developing the relationships with financial advisors who are focused on impact and sustainable investing, the better. And doing it at conferences that are throughout the year is a really good place to start.
A question for Stuart and Nicole. Are you barraged with kind of direct private equity, direct deals, throughout the week, or do you embrace those? Do you have, I see a lot of them given this place I'm in. We don't have a fund. I'm just wondering how you view the many diverse direct investment opportunities.
I'll take a stab at that. And the answer is yes. And I actually keep an open door to that, because I see one of our roles as the impact advisor as a gathering system for the broader impact community. So if I stumble onto, what appears to be a very well thought out business model, I will nurture and coach as best I can before pushing it into a formal due diligence process, with the hopes that it actually becomes then visible to the broader RIA community. It does take extra time. This is a very time intensive, and once if in fact you move forward and place money with this company or this entrepreneur, you're now married to that process for many, many years. So it is a labor of commitment to stay with these things as they unfold and mature, and stay in relationship with the company team.
Okay, great. Greg has a few questions. I'm going to just focus in on one of them so we can get to other ones too. He asks, where can I find verifiable data on the performance of ESG funds and impact investing?
One of the best places is to go invest your values at As You Sow, and they have a ratings. You can type in the ticker symbol of your fund, and it will tell you the percentage of. You have to analyze it a little bit, but it'll tell you the percentage of holdings. So that's one way.
Mm-hmm.
I should also mention Natural Investments has a heart rating tool. So I love that As You Sow Invest Your Values tool. I highly recommend that, just as Lisa talked about. If you go to the Natural Investments website, it's just naturalinvestments.com/heart rating. It's a system that's available to the public that our firm has also developed over the years, where you can look up different publicly traded funds, mutual funds, and exchange traded funds, and kind of view our firm's opinion, and heart rating. There's a number of different criteria, which you can read on the website more about what goes into that heart rating system. But did not want to forget about that.
Right. And there's the beauty of the market evolution over this last 30 years is that there are more and more and more of these platforms being built, and it, great for ValuesAdvisor. This would be a wonderful place to consolidate for as a resource bank. We use Ethos ESG is I think quite a good search tool for financial performance and ESG metrics in general.
Thank you for all that feedback. Lena is asking, to what degree do you take a normative approach to your advisory work versus a discovery process approach of the client's own values and goals? Stuart?
Well, I think I mentioned it earlier. I see fiduciary duty in this role that we play as a client-driven process. So standardized normative is the way I'm interpreting that term normative. Standardized formulaic solutions are out there in every nook and cranny of this marketplace. But I believe that what distinguishes us as impact advisors is placing a higher priority on relational dynamics and really working with the client to find what that more customized solution is. Because at the end of the day, in my opinion, my goal would be that, I have a client base that gets out of bed every day feeling connected to that money and those investments, and they understand why they own them and why they're taking the risk that they are. That level of engagement is to bring the investment process home, to make it highly significant, rather than externalizing it in the more, quote, normative process where it's just out there without much comprehension.
Mm-hmm. Thanks. Okay, next question is, following on Nicole's comments earlier, do you see the majority of investments being passive or predominantly active? What difference do you see for qualified versus non-qualified investors in this regard?
I can take a stab at that question. So there are, impact investing, there are great opportunities in the passive space. There are more index exchange traded funds out there who really have great screening criteria around ESG, who really take a hard stance around shareholder activism and advocacy. And those tend to be pretty easy for most people to invest in and don't have, requirements around net worth and asset level. When it comes to like more alternative, impact-driven, but our private investments, not off Wall Street, non-publicly traded investments, they are more and more are available to non-accredited individuals, but the majority it still requires quite a bit of you meeting a kind of a accredited investor status, or even higher qualified client, which is having accredited investors tends to be having at least $1 million of assets outside of your house, or you make over $200,000 a year as an individual, $300,000 a year as a couple. And then then there's other statuses that are higher than that, qualified client and such. So deciphering between those is really, I think, important to work with an advisor who can help you source and evaluate them and really help you determine whether or not it's going to be a good fit for all your various needs and goals.
Thank you. I'll just point Nicole and Stuart to some of Lena's kind of comments about her meaning of normative at the bottom of the queue. But I do want to move on to some other questions quickly. And if one or both of you want to come back to that at some point, feel free to. Regina says and asks, as a lifelong progressive working for a bipartisan organization focused on ensuring pathways to achieve truly bipartisan U.S. climate leadership, I'm curious to know more about where investment conversations may be happening around the need to fix the federal policy context that allows investments to be higher yield in terms of decarbonization. Permitting reform being one policy example. Does anybody want to comment on that?
I can take a stab at it. I think that's a correct assessment, that we are all prisoners of our past, right? We all exist within a regulatory framework that was driven by, I'm just going to use that term again, a profit first mindset. And giving that up is going to take a very strong continuing bottom up push on the part of our community to help us define this new source code driving investments. But regulatory reform, as we probably all are aware, is very, very sticky and takes a long-term commitment. And, the central bank model is nearly 500 years old, right? And yet it is one of the underlying systems transformations that is necessary to achieve the goals that we speak about in the impact economy.
I think we have, Lisa, go ahead.
I just want to add that, nothing in our economy takes account for the externalization of costs on the commons. So when we say profit first, since states have given license to corporations to operate, those corporations have lobbied to give them more and more leeway until now, 200 years later, they are people. So when you say historically, Stuart, it's really historical, and we have to shift the concept, and that's what a carbon price is one of the quickest ways to stop the externalization of carbon as a pollution on the commons. So we're working on it.
Mm-hmm.
There's a wonderful book by Robert Monk titled Corpocracy from about the mid-90s, which really describes what Lisa is laid out there about the evolution of the corporation. And the term corpocracy, I think, really helped me understand the dynamics underway.
Thank you. I'm going to sneak in one last question from Lee because it's gotten a few upvotes. do you have any recommendations for a person who wishes to work in this sector but is not yet a CFA?
Well, that's a good question, because our industry is still working on, I think, trying to help others understand that this is a viable and wonderful place, like her industry to work in. I think when I entered the industry, I wasn't even aware that like being able to be an advisor focused on impact investing was even a thing. It took time and relationships and my own seeking out of education to do that. I think reaching out like to advisors personally, like going on their websites, finding out how to send them messages, be proactive and reach out to people one-on-one. Most of us will make the time to have an individual conversation when there's time. Going to industry conferences that are sustainable investing focused. A lot of them have scholarships so that you can attend for free. USCIF is a place where you can go and look up all the companies that are members of USCIF. And there might be, I think there was a job board, or there could be some job boards. But I think what I have found in my experience is the individual starting to meet advisors or people in the field that do work that you are inspired by. Starting to build that connection and build those networks will be the fastest way for you to help learn about opportunities for working and growing in the field.
Thank you. Well, everyone, we're at time. For all or any of you that missed part of this webinar or would like to watch it again, the program will be available in our members webinar archive in the next day or two. If you're not a premium member and would like to watch it again, simply email me. I put my email in the chat, and I will send you the link and password to restream it. The same holds for the chat. You should be able to save it if you click on those three little dots on the bottom of the chat box. But if you can't and need it, just email me. This marks the end of our live program season. As is our practice, we take the month of August off from webinars because so many other people are taking the month off. And we return in September with a full schedule of autumn programs. I put the link to our calendar in the chat. I would recommend bookmarking that. There's one already for September in there, and we'll be putting new ones up over the next few weeks. I would strongly recommend that you sign up for our newsletters. You can do that through our website. That's a great way to keep updated on new magazine content that we're putting up throughout the week and upcoming live programs. If you appreciate the work we're doing at Impact Entrepreneur and you want free access to the ValuesAdvisor platform, the best way to do that is to become a premium member. And I put information on joining and a link to do that in the chat, as well as a special code that if you act soon, you'll get a 20% off the annual premium membership. And finally, I also put in the chat a link to a very short 5-question, take about 1 minute survey. We're always trying to improve how we serve our readers and members and webinar attendees. So please give us your feedback if you have just a moment after we sign off. Well, that's all. Lisa, Kate, it's been wonderful working with you and ValuesAdvisor in a few ways, especially though on this webinar, putting it together. And Nicole and Stuart, thank you so much for joining us to share your wisdom about the role of the financial advisor in an impact economy. I really appreciate the time and energy you gave over to this today. And thank you all for joining us. Hope to see all of you in September for our next program. In the meantime, enjoy your summer and stay safe. Take care now.
Thank
you, Lori.
Bye.
Lori.
Thank you, Lisa and Kate.
Thank you all.
Thank you, Kate. Thank you,
Great
Lisa,
session.
Lori.
Great to see everyone.